We are starting today's webinar on recent indirect tax amendments due to the union budget of 2022-23, which is just, it has been declared on January or February the 1st. So in that union budget, what are the changes that has been effected due to which the indirect tax, that is what has been amended in the GST, that will be explained to you by Supreme, including some glimpses on other indirect taxes like customs and etc. Now he will also brief you on the GST changes that has been made effective from 1st of January 2022, and what are the changes that has happened in the customs duty, the rate changes, exemptions that has been given to the gem and jewelry industry, the customs legislative changes, and other amendments in GST Act. So without expanding into all the ones which will be done, explained by Supreme today, what will be after some time will be taking over, I would like to give an introduction of Supreme. Supreme Kodari, of course, to council he is not new, and to gem and jewelry industry also he is not new, but just a background of him, if I can give it to you. Supreme is having a 12 years of post-qualification experience, and Supreme specializes in handling tax advisory and litigation matters in relation to the taxation and allied laws. So that is his basic forte. And he has extensively worked, not only he has worked with ELP, and with ELP he has worked with the council in different kinds of procedures and different kind of taxation when those laws were getting promulgated, like the excise duty on jewelry. On that issue, when we had when it was pushed down upon the gem and jewelry industry, so there is a lot of discussions which went on with the government. So Supreme was part of the team when we were negotiating with the government. Also, when the GST was being implemented, that time also, when ELP was acting as an advisor to the council, Supreme was also part of the team. And also time to time when different customs laws, etc., on that some deliberations happen, when the legal standing is being sought after, then of course we take advice from Supreme. And recently the gold monetization scheme and also the hallmarking, when the council was arguing with the government and trying to see that it happens as per the trade, whether it is exports or the B2B transactions, etc. So there also Supreme helped us into formulating our submissions to the government. And also we have worked with Supreme with regard to our submission for equalization levy on diamonds, RODTEP, which has been formulated recently, the anti-money laundering laws, and etc. So he has a wide variety of experience in terms of gems and jewelry. And if you want to know his background, he has also worked in Ernst & Young and Indian Oil. So here is Supreme, who every day, of course, we consult him. So now we have brought him to you so that he will give a very candid explanation of the laws of GST and indirect taxes like customs, which is applicable on the industry based on the union budget, which has recently been announced by the government. So over to you, Supreme, to take forward this webinar.
Thank you, sir, for the kind introduction, and thank you, GJPC, for providing me this opportunity. Without wasting any further time, I'll straight away, take up this presentation. This screen is visible, right? The presentation. Yeah. So, I have divided this into 3 parts. As ED sir has already mentioned, we will broadly touch upon some changes under GST, which have become applicable from 1st of January 2022. Now, why this is important? Because this is in a way linked to the subsequent amendments that have been announced in this year's budget. So we'll touch upon them. Then we will straight away go into the budget amendments which have been announced on 1st of February, and that are segregated into GST related announcements and announcements in relation to the customs law. So this is the sequence of our presentation today. Firstly, moving to the amendments that have been made effective from 1st of January 2022. Now, these essentially are amendments that were actually promulgated in the last budget. So the Finance Act of 2021 had enacted some amendments in relation to GST. Now, in terms of the mechanism, even while the Finance Act 2021 gets promulgated, the authorities have to come up with a notification notifying that these changes have to come into force from a certain date. Now, while some amendments were notified last year, because of the eminent reasons, like for instance, there was a controversy in relation to applicability of interest on net basis or gross basis. So that amendment was notified last year. And also to clarify that in relation to the GSTR 9C filings, certification is not required from a chartered accountant. It can be done in-house. So those amendments were already brought into effect. But there were some major amendments, especially in relation to the context of input tax credit, which have now been notified. And we'll go into those amendments and some other amendments in relation to what is a self-assessed tax and other instances. One amendment which has not yet been notified and which forms part of last year's budget is in relation to Section 16 of the IGST Act. Now that is relevant because in that amendment, one of the aspects is that in case you don't realize foreign exchange in relation to export of goods, then there is a denial of refund. So that specific amendment was made in Section 16. Mind you, there is already a rule in place, 96B, which in a way seeks recovery of refund if export proceeds are not realized within the FEMA prescribed period. But by virtue of not notifying the subsequent provision in the CGST Act, there is a possibility to argue that the rule is without any legal backing. So, I thought it is relevant to mention this because some of our members are facing this issue in relation to export refund. So now we will move into this amendment that is the most critical one, which has been notified effective 1st January 2022. What is this amendment? A certain provision has been inserted to Section 16(2), being clause AA. What does that require? That states that input tax credit cannot be availed by the recipient unless the supplier has furnished the details of those supplies in his GSTR1 and those details have been communicated to the recipient in the manner prescribed under Section 37. Now, alongside that, what has also happened is the most vexed rule, Rule 36(4), has also been substituted. Now, what does that mean? Prior to notifying this amendment, Rule 36(4), as we all know, was already in force. It prescribed the situation where, in respect of unmatched credits, you were entitled to avail certain portion, which was measured by applying that proportion to the matched credits. Just prior to January 2022, you were allowed to avail 5% of your matched credits in respect of unmatched transactions. Now, this 36(4) has undergone a complete overhaul so that it can be aligned with Section 16(2) AA. What it states is that, the input tax credit shall now be allowed only if details have been furnished by the supplier in Section 37 as per Section 37, and also if those details have been communicated to the recipient in form GSTR 2B. So now GSTR 2B is the mother document, primary document on the basis of which input tax credit can be availed, effective 1st January 2022. If there is anything beyond GSTR 2B, that as per the authorities cannot be availed. Now, input tax credit has been a very critical affair so far as GST is concerned. And if we look at the amendments that have come about in this year's budget also, they are all primarily focused in relation to input tax credit. So it is important that we have a look at the background of how this has shaped up in terms of the history of GST and where we are today. Now, pre-July 2017, the essential focus was that, GST will be premised on a 3-return system, which will have a 2-way communication alongside provisional ITC and matching tools. But what was envisaged due to system challenges could not be implemented. A stopgap arrangement was agreed in terms of GSTR 1 and 3B, 3B being a simplified return, and also in relation to self-assessed tax. So that self-assessment was carried out and there was no mechanism to match credits vis-a-vis what was reported by the supplier. Now, government again made an attempt to sort of reconcile this by introducing Section 43A. Now, Section 43A was notified Vide Finance Act 2018 so as to empower the government to come up with a certain procedure for availment of ITC. And also it prescribed a restriction of up to 20%, which could have been notified by a rule. But unfortunately, that provision also never got enacted. Now, sometime in October 2019, this vexed provision, Rule 36(4) got inserted, and it sort of restricted, ITC in respect of unmatched transactions, initially up to 20% of matched transactions, which was then brought down to 10 and then brought down to 5. So this provision, as I mentioned, lacked statutory backing because there was nothing in the Act, in the CGST Act, that enabled the authorities to sort of impose this restriction on the taxpayers. So as to reconcile this position, finally, this provision section 16(2)AA has been enacted, Vide Finance Act 2021, and now it has been given effect. And hence we can say that, Rule 36(4) has received now statutory backing. Okay. But, mind you, Rule 36(4) has been subject matter of challenge before several high courts, including Rajasthan, Gujarat, and also West Bengal. And it is likely that this amendment also will get, impugned in those petitions. And one has to wait and watch as to what would be the outcome in relation to those proceedings. Now, what are the issues that largely arise in relation to, this provision? One is, do you actually implement and give effect to these provisions at the time of availment of credit, or can section 16(2)AA can be, effectuated post facto? There are different aspects, which will help us to, sort of judge this, but this position would remain open-ended. The first is section 16 talks about entitlement of credit. Entitlement and availment are two different things. Entitlement, to my mind, can be established even post facto. But unfortunately, the wording employed in the Rule 36(4) talks about availment. So again, there's a gap between the section and the rule. The second thing is that, the statute book as it stands today has a provision which is section 41. Section 41 allows you to take provisional credit. The concept then is that you are allowed to take provisional credit, and then all other subsequent restrictions can be tested at a subsequent stage. So that in a way is supporting that, you can avail credit and you can meet these conditions later on. Thirdly, section 16(2)AA in a way talks about the factor that, the supplies have to be reported in terms of section 37. Section 37 read with section 38, in fact, as it stands today, permits the recipient to include details of inward supplies which have not been reported by the supplier. So essentially, that gap is still there. So can supplier, also, and can the recipient also upload details at its end, which are not in a way submitted by the supplier and claim credit? That remains open-ended. But mind you, as per the budget announcement that was made last year and the memorandum thereto, it has been clearly stated that, this restriction has to be applied at the stage of availment. So the legislative intent is quite clear. It is for the courts to, in matters where litigation goes upwards, to decide as to what norm has to be applied in a way. Just relevant to note that whatever I mentioned right now will also undergo a change post the budget announcements that have been made on 1st of February this year, because the government is now, thinking of completely doing away with matching concept, two-way communication. So whatever I mentioned in relation to section 41 and section 38 will have to be revisited. But law as it stands today, this interpretation is possible. Now, the other issue that arises is that what happens to the past period? This sanctity to Rule 36(4) has been provided only prospectively now. So there is a prospective legal backing provided. So what happens to transactions for the past period? So in relation to the past period, strictly speaking, Rule 36(4) would be ultra vires CGST Act, but it is again, the courts will have to strike it down. What happens to the borderline transactions? Okay, this new provision has been given effect from 1st of January 2022. So what about, invoices for the past period which are being reported post January 2022, or in respect of which input tax credit is being availed after, that date? So, there's a legal theory which states that procedural changes can be retrospective, but substantive changes are always prospective. Now, this is a substantive change because, the act itself has been amended. So to my mind, for all invoices which are prior to this date, the old norm can apply. You can apply 5% benefit to that. But again, the authorities may dispute it. So it is for us to decide as to whether we want to adopt a conservative approach or go by a more aggressive approach. If CBIC clarification issued at the time of introduction of Rule 36(4) is any indication, then as per that also at that stage, they had agreed that this new rule then would apply only to invoices issued after prescription of that rule. So in a way, the department also is inclined to this interpretation. There is another major amendment that has been notified or given effect. Now that amendment is in relation to section 7512. What is section 7512? Section 7512 states that if there is any self-assessed tax, okay, which means something you have reported in your returns as payable, in relation to that tax, if that is not paid, the authorities can straight away come to your door and recover the amounts. They don't need to go through any adjudication, issuance of show cause notice, nothing of that such is required. Now, with regard to this, an explanation was added very recently, in terms of, the enactment that has been given effect, which states that for the purposes of this subsection, self-assessed tax shall include the tax payable in respect of details of output supplies furnished under section 37, but not included in the return furnished under section 39. What does that mean? It simply means that if you have reported something in GSTR 1, but those transactions do not, come to be reported in GSTR 3B, then that will be construed as self-assessed tax. And the authorities can sort of seek recovery without issuing any show cause notice. Now, once this amendment got enacted, a lot of deliberation happened with the authorities, where authorities were sensitized that there could be genuine instances which lead to mismatch between GSTR 1 and GSTR 3B. For instance, if you have reported some transaction in 3B in the prior month, but you omitted to report this in the prior GSTR 1 and you report this in the current GSTR 1, then there will be obvious discrepancy. So, considering all of this, the government has come up with an instruction saying that, there are instances where genuine mismatches may arise. In those instances, there is a need to provide an opportunity to the taxpayer to explain those differences. Hence, a notice would be issued. And if the officer is satisfied with the explanation, no recovery would be initiated, which is a welcome instruction, but it has its own set of issues. First issue is that, again, this depends on the satisfaction of the officer. What if the officer is not satisfied? If he is not satisfied, or if he decides not to be satisfied, then he can straight away recover. In those instances, what is the recourse available to us? We don't have any appellate remedy as there is no order. We'll have to straight away file a writ petition in the High Court if the stakes involved are high. So that's issue number one. What's the second issue? Second issue is in relation to interest. So, recoveries can be made in accordance with section 79. Okay, section 79 also enables you to recover interest. Now, you guys would remember that section 50, which was the provision under which the interest is levied, there was a dispute in relation to whether interest is applicable on a net basis or a gross basis. After a lot of deliberation, that provision was amended to say that interest will apply only on net basis. But that provision is very situational. It applies to a situation only where there's a delay in filing of return. Now, where there's a mismatch between GSTR 1 and GSTR 3B, not necessarily will it lead to a delay in filing of return, or it will not be attributable to that scenario. And hence, the department can sort of levy interest on the full amount. Okay, so that is the secondary issue that is arising in relation to this amendment. The third issue is in relation to penalty. What about penalty? Because the officer will recover interest, duty, straight away under section 79, but there is a provision under section 73, which is 7311, which states that if self-assessed tax is not paid, okay, then, whenever the recovery happens, penalty will also be levied. So there is no waiver of penalty even if show cause notice is not being raised. The penalty shall be 10%. So alongside the recovery under 79, you will also see an issuance of show cause notice under section 73, which will eventually culminate into levy of penalty. So there will be, multiple proceedings to that effect. Moving to the next amendment, we'll briefly touch upon this because we'll have to also cover the budget amendments. scope of section 83 provisional attachment, that has been expanded. It has been, widened in that sense. Earlier, provisional attachment could be resorted to only in given situations, which I have, documented in my presentation, section 62, 63, 67. But with this amendment, wider powers are conferred. This can now be initiated at the stage of any proceeding under chapter 12, chapter 14, chapter 15. Okay, which in a way expands the scope to include even, issuance of summons, arrest, scrutiny of returns, all of those situations. At that stage, the government can initiate provisional attachment, which could be in respect of your property or your bank account. Now, this essentially is to address some decisions which were issued, including the decision of Bombay High Court in the case of cash impacts. In that decision, it was stated that, at the stage of summon proceedings, which are essentially proceedings under section 70, you cannot invoke section 83. So in a way, this overcomes, those sort of judgments. One aspect relevant is that the principles laid down by the Supreme Court in the case of Radha Krishan Industries will continue to apply, which states that, invocation of section 83 would require formation of opinion based on tangible material evidence. And also that, this should be used as a last recourse to protect the revenue. So that will continue to apply. Moving to the next amendment. Now, this amendment is in relation to section 129, which sort of has penal consequences or seizure and detention related measures in relation to goods transported in contravention of the CGST Act. So these are basically to deal with non-compliances in relation to either e-way bills, or where there is no e-way bill, then other documents that should accompany the movement of goods. Now, earlier, once goods were detained, okay, to release the goods, one had to pay the tax as well as penalty. Okay, so this led to a confusion because there are other provisions under the Act under which tax can be realized. Plus, in relation to the supply transaction itself, at some stage tax would be paid. Okay, so there was a need to revisit this provision. And hence, what has been done is that the application of tax under this provision has been removed. Okay, but unfortunately, they have doubled the penalty. So if you look at what it was prior to the amendment, it was like tax payable on the taxable goods plus 100% of the penalty. Now you have to pay only penalty, but 200% of the tax amount. So in a way, welcome move, but in a way, the penal consequences have been doubled. The other key aspect here is that in an event where, the taxpayer did not pay the amount determined under section 129(3), okay, the consequence pre this amendment was that confiscation proceedings under section 130 could be launched. Now there is a complete disassociation between section 129 and section 130. What is now being stated is that if the payment is not made within 15 days, the officer will go ahead and sell and dispose the goods or conveyances and realize the amount. Okay, so that is the amendment which is relevant here. Now here again, there is one dichotomy, from a 129(3) order that imposes penalty because goods are not transported in the manner prescribed. You can file an appeal. Okay. In fact, the limit of pre-deposit has been enhanced. It has been increased from 10% to 25% in relation to such orders. Okay. But the problem is that 129(3) does not recognize this. You still have to release the goods based on 100% payment or whatever is determined. In case you don't release the goods, then the officer can sell them off, recover and realize. So there's a need to reconcile the appellate proceedings with 129 so as to say that if the SSC is going to file an appeal, okay, then the goods will be released unconditionally. And also, the other recovery provisions will not be invoked, subject to he giving an undertaking, because the taxpayer is already paying 25% as a pre-deposit in the appellate proceedings. So we just quickly touched upon all these amendments that have, at least the major ones that have been effectuated from 1st January 2022 onwards. Now we will straight away move to the budget related announcements. First, we will focus on the GST announcements. Okay, so what has happened?
जी एक सेकंड खाली मैं ऑडियंस में जो हमारे मेंबर्स जुड़े हैं उनसे मैं रिक्वेस्ट करूंगा कि आपके जो भी प्रश्न होंगे आप Q&A में उसको आप पोस्ट करते रहिए. इस कार्यक्रम के लास्ट में जो है आपके सभी प्रश्नों का उत्तर जो है सुप्रीम जी की तरफ से देने का प्रयास किया जाएगा। तो आप जो भी प्रश्न, जो भी डाउट्स, जो भी इस तरह की कोई चैलेंजेस आपको नजर आए, उसको कृपया आप जो है Q&A में निश्चित तौर पे पोस्ट करें। थैंक यू सो मच। सुप्रीम जी आप आगे बढ़े प्लीज।
Thank you. So first amendment is that section 38 is being substituted entirely to do away with two-way communication that was envisaged initially under GST, and is also seeking to impose additional restrictions in relation to input tax credit. Now, before I go into this, I just want to clarify that these amendments are not effective right now. Okay, there are three levels of activities that will happen. A, this will be passed by the Lok Sabha, Rajya Sabha. It will culminate into Finance Act. Thereafter, it will receive presidential assent, and even thereafter, government will then choose a date and notify it from when these provisions shall become applicable. So whatever we are discussing is not the law of the land as of today, but certainly at some stage it will become relevant and come into play. So section 38 is completely abolished. Okay, section 38 essentially, amongst others, enabled the recipient to sort of accept or modify supplies reported by the supplier, also make changes therein, and those changes would go back to the supplier under section 37, and supplier would accept it. That was the envisagement. It never happened, but that is what section 38 contained. Now it is being completely revamped. What is the new section 38? So new section 38 does away with two-way communication as stated. Also, it states that details of outward supplies or such other supplies as prescribed and an auto-generated statement of ITC shall be made available to the recipient in such form and manner as may be prescribed. Now that statement, we don't know the format or the form under which that statement would be issued as of date, but in terms of the wordings of section 38, that statement would be comprised of two elements. The first element would include details where ITC is admissible, and the second element would include ITC not admissible. So the government will at its end determine certain transactions where ITC is not available to you, and you will not be allowed to avail that ITC. What are those nature of situations? So in the third banner and the bullet thereunder, we look into some of those situations. So these are the situations prescribed under section 38. So AGS to inter alia include details of ITC not admissible on account of furnishing of details by supplier under section 37. Okay. So what nature of details supplied by the supplier under section 37 will not be allowed? First, within such period of obtaining registration as prescribed. So what they are looking at is maybe new suppliers, new GST registrants who might have filed belated returns. So in respect of those nature of returns, it will be prescribed in the rules that ITC shall not be available, and that will be red flagged in your statement that comes to you as a recipient. The second situation, when the supplier has defaulted in tax payment for such period as prescribed. Again, it will be notified, it will be prescribed wide rules. But the concept here is if the supplier is non-compliant, does not pay taxes, okay, in those situations that supplier will be red flagged. But here one critical question that arises is that the supplier might have paid 90% of its output taxes. Just an example, it might not have paid 10% of its taxes. Still will he be red flagged, and what will be the impact on me as a recipient? Will all my inward supplies get red flagged or barred for availment of credit? There's no clarity as of today, but that should not happen. Even in VAT, this situation has arisen in the past. Unfortunately, the entire credit gets in a way, tainted when that sort of red flagging happens. But other major problem is that it is very difficult to track as a recipient whether the supplier has defaulted or not. That is one situation. Second, the details and restrictions envisaged under section 38 appear to be at a supplier level and not at invoice or transaction level. What does that mean? That essentially means that the moment the supplier is red flagged, all corresponding recipients will be barred from taking their credit. Now, these are serious provisions. Okay, as and when these are enacted, notified, one has to seriously look at them and gauge the impact that it will have on us. The third situation, again, is where the output tax payable as per GSTR 1 is more than the output tax paid actually via GSTR 3B during such period and by such limit as prescribed. Here again, we just looked at 7512, and we also noticed that there are genuine reasons why there could be a gap between GSTR 1 and GSTR 3B. So will the suppliers get an opportunity to sort of explain those gaps, or this is an automated mechanism which will throw them into the red flagging criteria? So those are questions that will come up. The fourth item is again quite unique, because it goes into the ITC claim of the supplier. As a recipient, how am I concerned about the nature of claims that he has made? But it states that a supplier whose ITC availment is more than ITC available as per this very section, okay, during such period and by such limit as prescribed, he will also get red flag. Okay, and then there are other categories, and there is also a residual category which talks about supplier which falls within the class of persons as prescribed. So, apart from the factor that this is draconian, the other worry that I have that there is excessive delegation. Everything will be prescribed. Okay, so this, is a provision that will, be troublesome going forward. Now, coming to associated changes that have been carried out, to sort of, implement Section 38, the proposed changes. The first one is insertion of Section 16(2)(BA). So Section 16(2)(BA) is being inserted to say that, a registered person shall be eligible to take credit only of those supplies which are reflected as, ITC compliant in the AGS that is provided under Section 38. That's the first one. Second, obviously, Section 37(1) and 37(2), which in a way supported two-way communication, are being removed because there is a clear shift from two-way communication to one-way communication, if I may put it that way. Okay, and reflective changes have been made to other provisions like Section 47, 48, references to Section 38 and the return thereunder, which is GSTR 2, which no longer would be there, are being omitted. And also the matching provisions which were in place but never effectuated, Section 42, 43, and 43A, they are also altogether contemplated to be eliminated from the statute book. Now, what are the issues? I talked about few of them, but let us spend some time in relation to this amendment read with Section 16(2)(BA). What would be the mechanism of communication of details under Section 38? Will it be GSTR 3B or some other form? No clarity as of now, but that is something the government will, I am sure, come up with well in advance. But today we already have a GSTR 2B, okay? And GSTR 2B is the instrument under which Section 16(2)AA is governed, read with Rule 36(4). So what will happen to that? Will that coexist side by side under Section 38 related document? No clarity. So as I also mentioned, restriction as of now is envisaged at a supplier level and not at an invoice level. Okay. Also because of the factor that GSTR 3B today also is a summary return. So that possibility will never arise, and hence there would be blanket denial of credit whenever the supplier is getting red flag. Now, the other thing which we also touched upon is whether supplier will be given an opportunity, before, his supplies are reported as not ITC admissible. No clarity. Red flagging, whether it would be prospective or retrospective. What I mean by this is, suppose, I procured from some supplier throughout a period, throughout a fiscal, but he got red flagged only in the month of June. Okay. So will transactions of April and May also come to that pool? Or in case they are reported after red flagging, but the default is not there for those months, would they still come into that pool? So these are questions which will strictly come up as in when we get close to the deadline where this is implemented. Now, how to track subsequent compliance? Suppose a supplier did not pay up for 6 months, just assume, and subsequently he pays the amount. Okay, then will those credits which were blocked become available? How as a recipient I am to make out or understand or figure out that he has complied? There is no mechanism to correlate past payments with subsequent GSTR 3Bs. If he files a DRC 03, how am I to, come to learn that he has made the payment? Okay, even if assuming that, those payments are reported and I sort of am available to, pull those credits into my credit pool, what will happen to the timeline under Section 16(4) if all of this happens post November, the new timeline which is prescribed? So will those credits be hit by the timeline prescribed under Section 16(4)? Again, no clarity. And the last point, which is also crucial, is that at times when show cause notices are issued, they invoke section 74, in which mens rea is alleged. In those instances, the SCN may be adjudicated in next couple of years and all, but the ITC, if it is paid under protest, the tax by the supplier is paid under protest, then whether I'll be eligible to that, ITC, because there is a bar under section 17(5) that states that if tax is paid under section 74, it shall not be admissible. So again, that is a question mark. So there are various issues and doubts and unanswered, questions with regard to these provisions, which I am sure and I am hopeful that the government in due course will clarify. So as a recipient, what should I do? Because there are things which are beyond my control. So should I focus on things which I can control? Just broad level indications in terms of what, as a recipient should be our approach. Okay, so before onboarding any vendor, we should carry out, some sort of screening exercise. We should check on routine vendor compliances. The most important part is that we should revisit our contractual terms with the vendor, okay, and ensure that there is an indemnity clause with regard to taxes, GST specifically. Okay, we may also, think of withholding GST payments till the time the transactions are reported in the AGS. Okay, we can think about that. Whatever GST is lost, we can, think of recovering that from the vendor. And we also need to, closely monitor the ITC portal, so that as and when any lost credit becomes available, we should be able to track that, and we should also correlate and identify whether the 16(4) timeline is being met or not. Moving on to whether, section 38 as proposed to be replaced or substituted, read with section 16(2)(ba), whether it is susceptible to legal challenge. To my mind, clearly it would be susceptible to legal challenge because of various reasons which I have listed in this slide. It suffers from the vice of excessive delegation. Recipient cannot be made liable to, meet impossible conditionalities. For lapses of the recipient, supplier, the recipient cannot be made liable, as has been held by the Supreme Court in Arise India and also, by the Madras High Court in DY Bethel. So these are the few, grounds on which maybe this can be challenged. I'm sure, there would be active litigants who would challenge it. And, at some stage, we will see an outcome in relation to these sort of proceedings as and when they are challenged, So the next change, that is proposed is again complete substitution of section 41 of the CGST Act. Okay, doing away with the concept of provisional ITC and, replacing it with a mechanism where, where the supplier does not pay the GST, the ITC can be realized from the recipient along with interest. Okay. So what was the extent or what is the extent section 41? Section 41 as it stands today enables provisional availment of ITC, which remains contingent upon the subsequent, envisaged matching exercise. Also with 16(2)(a) in force, it was also being looked at, as an impediment to, enforcement of 16(2)(a) at the stage of availment, because there was an argument to say that section 41 enables me to avail provisional ITC. So because of all those reasons, I think it has been done away with. Now, what do we have in terms of the substituted section 41? So as I said, it allows the government to sort of recover ITC from the recipient if the supplier defaults in payment of GST liability, and it can be recovered along with interest. One good part here is that it also states that as and when the recoveries are made from the supplier, that input tax credit can be recredited in the ledger of the recipient. Still, there are some questions which require consideration. Okay. Whether interest, in case realization is made in the hands of the recipient, whether interest will apply if the credit is not utilized. Okay. We will see an amendment to section 53, which is proposed, which now states that interest will only apply if it is ITC, if ITC is availed and utilized. Okay. So what would be the implication of section 53, the revised one, vis-a-vis section 41? Okay, so to my mind, since interest will be recovered under section 53 only, liability will only arise if it is not, if it is utilized. If it is not utilized, the liability shall not arise. The second issue which arises is, what happens to the restriction of time limit of 30th November in relation to re-availment of credit. Okay, will that time limit apply? To my mind, no, because that limit has to be met at the threshold of availment, which has already been met. Okay. Now, if there is a reversal of credit with interest, and subsequently the supplier pays that amount, and I seek recredit of that ITC, then whether the interest paid at the first stage, will that be refundable? No clarity. Okay. And lastly, and most importantly, there is no mechanism for me as a recipient to determine whether subsequently the supplier has complied or not. People who are from Maharashtra would know that under Maharashtra VAT laws also there was this concept of J1, J2, okay, under which if the vendor, okay, makes good the tax amount, makes good the payment of the tax amount, then the recipient would be entitled to avail the input tax credit. But in my experience, I have not seen a single instance where the recoveries from the suppliers have been passed on to the recipients. So I have my own doubts as to how this can be operationalized. So the next critical amendment is in relation to Section 53. Okay, Section 53 essentially, as it originally stood, as it stands even today, okay, it seeks to apply interest in relation to situations where there is excessive ITC claim or excess reduction in liability via credit notes, which arise pursuant to match-mismatch exercise. And the interest proposed there is 24%. Now, as we know, this match-mismatch provision is being done away with. So essentially now Section 53 has also been revamped. It is proposed to be revamped, whereby it states that if there is wrongful availment of ITC availed and utilized, I am stressing on and utilized because that's a welcome measure, then interest shall apply at the rate of 18%. And this provision is being amended retrospectively from 1st July 2017. Okay, so this is a welcome amendment. So wherever taxpayers have paid 24% in the past, they can look at the possibility of claiming refund subject to limitation period. Now moving to some other amendments. Okay, so there is this common trend these days that you create a restriction through a rule, okay, at a given point in time when you don't have the legislative backing, and subsequently you carry out an amendment to give the legislative backing. So unfortunately that trend has been there, and there are 2 amendments which have now been carried out to provide legal backing to rules which were already existing. Okay, so Rule 86A existed in relation to blocking of credit. So now that has been provided legal backing by prescribing restrictions, powers of prescribing restrictions under Section 49(4). Similarly, the 1% payment through cash ledger, that Rule 86B has been given legal backing by enacting Section 49(12), which enables the government to prescribe the maximum amount that can be paid through electronic credit ledger. So these are, just to show that trend, I have, separately captured these. So there are some other amendments also, and I'll come to them. The other amendment which has been made is Section 37(4) is being amended to say that now you cannot file a GSTR1 for any given period if you have not filed GSTR1 for the prior period. Similarly, Section 39(10) is being amended to say, under Section 39A, the requirement or restriction of not being able to file 3B for a given period if you had not filed 3B for the prior period was already there. Now, what is being added is that if GSTR1 for the same period is not filed already, then the assessee will not be able to file GSTR3B for the said period. Okay. Mind you, Rule 59(6) already bars filing of GSTR1 for any given period if GSTR3B is not filed for the prior period. Now, what is being done through this is a sequential pattern has been created. Okay. Now you have to proceed sequentially. So you'll have to first file GSTR1, then 3B, then one of the next period, and so on and so forth. So that sequencing has been implemented or is being sought to be implemented by virtue of these provisions. So another welcome amendment is Section 49(10) that allows distinct persons to transfer balances in CGST and IGST lying in electronic cash ledger. So that facility has been opened up. Some amendments in relation to Section 54 have also been carried out. Firstly, in case you have balance in your cash ledger, okay. So in relation to that, you could have filed a claim by virtue of a return under Section 39. Now that has been done away with. You will have to file a separate refund claim. It could be RFD01, any other form. So you will have to go through the entire hassle. The second is that there was a power, and there's a power in relation to withholding of refunds and offsetting it against any other demand and all, which is only applicable in relation to zero-rated supply-related refunds or refunds in relation to inverted duty structure. Now that restriction is proposed to be extended to all nature of refunds. And thirdly, in relation to SEZ supplies, there was some doubt in relation to what would be the relevant date for determining the time limit of 2 years. So there they have clarified the relevant date would be the due date of the return in which the corresponding supplies are being reported. So these are certain other amendments. Other welcome amendments included, relaxing of due dates. So now the time limit for availment of credit is being extended from 20th October to 30th November of the subsequent fiscal, obviously. Similar changes are being made to section 34 as well with regard to credit notes. And with regard to, rectification of GSTR 1 and GSTR 3B also, similar amendments have been made. Okay. But for all practical purposes, I think this will be the 20th of November, because we will do the return filing on the 20th of November. 30th of November does not coincide with any return filing. So 20th of November would be the due date in relation to these compliances. But in respect of, quarterly filers, there may be an issue, because they generally would file the return for the month of, or for the quarter of October to December, sometime in January. Any compliance deadline may not arise, around 30th November. So that is something that the government will have to look at. Maybe some relaxation or some tweaking will be required for that. Now, just let us pause for a moment here, and let's just, talk about some emerging trends. GST has been in place for now, around more than 4 years. So, what is the emerging trend? Initially, it was all about removing cascading, one nation, one tax and all of that. But the kind of amendments that are being carried out, okay, they are more so focused on curbing GST evasion. So that is a primary focus. The other focus in terms of these amendments, as also the GST Council announcements recently, is revenue augmentation. So, the compensation cess may get, withdrawn, or, there may be a possibility that it will be used only for, the loan that has been taken by the central government. So there's a focus on revenue augmentation. Now we are also looking at an era where we are talking about restricted credits rather than seamless credit. So that is another, trend. And the other major trend is that now government is coming up with amendments so as to address anticipated legal challenges. Okay, the one we spoke about in relation to, say, withdrawal of section 41 or substitution of section 41. So those kind of changes where they are perceiving that because of this provision, there may be a legal challenge, they are amending it. Okay. And the last trend which we are seeing is that there is excessive delegation. Okay, so there's a lot of delegation in this amendment, in this budget also. Many provisions have been enacted to confer power on the government to enact rules. So which is again, not in alignment with the theme of GST. Now we will quickly come to some customs and policy announcements. So with regard to the gem and jewelry sector, we all know that the rate in relation to cut and polished diamonds and gemstones have been reduced from 7.5% to 5%. And when I say rate, this refers to BCD, basic customs duty. In relation to imitation jewelry also, what has happened is that the rate has been increased on imports so as to support the domestic industry. And the other welcome amendment is in relation to sound diamonds, where there is an exemption that has been conferred. Okay. But with the amendment with regard to sound diamonds, also there are accompanying issues. And let me just brief you in relation to what the position was, and what was the issue and how it has not been completely addressed. The background is that sound diamonds, as per the Kimberley Process Certification Protocol, are considered as rough diamonds. And historically, they have been exempted alongside rough diamonds so far as BCD is concerned. But sometime last year, summons were issued and inquiries were carried out so as to disallow that exemption, and GJPC made several representations. The voice of GJPC was heard, obviously, and the exemption has been introduced. But the problem is that the exemption is prospective. The new entry 345A is only prospective. Secondly, it comes with a conditionality, which states that Kimberley certificate should specify that the imported goods are diamonds not further worked than simply sawn. So what are the issues that arise? First issue is that this is prospective. Historically, sawn diamonds are nothing but rough diamonds. Across the globe, they are treated as rough diamonds. So there is a need to clarify that benefit under 345, which was the prevailing entry and also prevails now for rough diamonds, would continue to apply for the past period. The second issue is that the Kimberley certificate, and this is for the future imports, cannot be amended so simply. And these are certificates that will be issued by the exporting jurisdiction. To add a declaration that these are diamonds not more than simply sawn is very difficult, because world over rough diamonds and sawn diamonds are synonymous. Okay, sawn diamonds are included in the definition of rough diamonds. So these are certain challenges, and I am told that GJPC is already working towards seeking redressal in relation to these challenges. Some other announcements in relation to the gem and jewelry sector which are relevant. Firstly, e-commerce. The Honorable FM has announced that shortly, by June this year, an e-commerce policy for export of jewelry shall be in place, which is a welcome move. Second is, there was an announcement made in relation to surety bonds. And what the FM mentioned is that, in place of bank guarantee, surety bonds can be used to reduce the cost for contractors and suppliers. Okay, and the FM also mentioned that this business, of gold imports will also get benefited out of this, policy reform. So what are surety bonds and how does it impact gold business? While a lot of clarity is still awaited, but surety bonds essentially are insurance contracts which are underwritten by the insurer and which are used or are likely to be used as an alternative to bank guarantee in government procurements up till now. The IRDAI has already come up with draft regulations in relation to how this will work, and that also includes customs bond. So there is some possibility in the near future that the bank guarantees that are being furnished by the jewelers as of now to the nominated agencies may get replaced by surety bonds, but we have to sort of ensure that realistic benefit comes across. So that is something we'll have to focus on. The other amendment is in relation to SEZ revamping. Okay, so from certain period itself, SEZ revamping has been on the cards. FM has now gone ahead and announced that the SEZ Act will be completely revamped and the new legislation would be formulated, which will also enable the states to become partners in, and I quote, development of enterprise and service hubs. Okay. Also, there is an announcement that customs reforms will also happen and SEZ portal will now get allocated to customs. Right now there is SEZ online, but now SEZ would operate from the customs portal. All these changes would effectively be put in place by September 2022. Some other, and I'll be quick now because I know we are short of time. We'll have to also go into the Q&A. So I'll just touch upon some key amendments made in the customs law. The first is jurisdiction of DRI. Okay, we all know that in 2020, the Supreme Court came up with a ruling in the case of Canon India to say that DRI is not a proper officer and is not empowered to issue the show cause notice. Since significant amounts were at stake, the government was expected to overcome this anomaly. So they have come up with amendments to sort of address this, and validating provisions have also been introduced to say that notwithstanding anything contained in any judgment, decree, order, these amendments would prevail. Okay, so that change has been carried out. In relation to valuation, an important amendment has been made under section 14(1). Power is being prescribed or provided to the government to prescribe rules to impose additional obligations on the importer of certain class of goods, and especially where the officer or the board is of the opinion or has reason to believe that the value of such goods have not been accurately reported. Now this comes in relation to, and also as a precursor, I would want to say that this stems from the decision of the Honorable Supreme Court in the case of Century Metal Recycling. So essentially in that decision, Supreme Court has said, and that was in the context of Rule 12 of the valuation rules, where the wordings used were reason to doubt. So the Supreme Court said that reason to doubt has higher threshold than reason to believe, and the government or the authorities should be having access to reasonable evidence of undervaluation. Only then they can dismiss the valuation as per Rule 12. So this decision, was coming in the way of the government imposing certain restrictions or, checking certain valuation abuses. So this amendment has been brought about so as to overcome this decision essentially. There are some other amendments. I'll just briefly touch upon those amendments. scope of advance ruling, thereunder a major change has been made to say that an advance ruling, and when I say advance ruling, I'm referring to the customs advance ruling. The advance ruling shall be valid for a period of only 3 years. Okay, so now an advance ruling will come with an expiry date. Okay, so this change was not expected, because till now an advance ruling, unless the facts undergo change, should have remained valid throughout. Now there may be a need where the importer would have to go back to the authority after 3 years to seek revalidation of the advance ruling. Now the other amendment which has been proposed is insertion of section 135AA, which is proposed to restrict publication of data in relation to imports and exports and importers and exporters publicly. What does that mean? There are certain websites like zoba.com, which provide details of importers and exporters. So this amendment prohibits such publication so as to curb the leakage of confidential data, in the market. The last amendment that I'll just refer to is insertion of section 110AA, which is a welcome move and which factors the principles enunciation in the ruling in the case of Canon India of the Supreme Court. Now, Supreme Court has said that the same officer who had initially assessed should also have the right to review or recover. So what 110AA states is that in case any inquiry, investigation or audit is being carried out by someone other than the officer who has jurisdiction, then that officer would, before making further inquiry and after having completed investigation, hand out the report to the person, to the officer who actually has jurisdiction, and all subsequent steps in terms of recovery or even deciding whether a notice has to be issued or not shall be taken up by the officer who has jurisdiction. So this, to my mind, is also a welcome amendment. And with this, I come to the end of my presentation. Mithilesh, if there are any questions, we can straight away take them.
निश्चित तौर पे सुप्रीम जी, हम जो है एक बार आपको इस सुंदर, मैं चाहूंगा कि प्रेजेंटेशन को आप हटा लें तो आप रूबरू हो पाएंगे लोगों के साथ में। तो आपके सुंदर प्रेजेंटेशन के लिए हम आपके आभारी हैं जीजीपीसी की तरफ से। और मुझे लगता है कि जिस ढंग से आपने एक एक मुद्दे को टच किया है, तो कुछ बहुत सारे प्रश्नों की गुंजाइश उसमें नहीं बचेगी लोगों के पास में, लेकिन सर्टेन क्वेश्चन जरूर हमारे पास में है। मैं जो स्वान डायमंड के बारे में जो आपने बताया उससे एग्री करते हुए हम अपने ऑडियंस को बताना चाहेंगे कि स्वान डायमंड्स के बारे में जो क्लैरिफिकेशन आया है, इस तरह के चैलेंजेस हम काफी डेढ़ साल से फेस कर रहे थे यहाँ पे पीसीसीसी में। अब उस चीज से हमें छुटकारा मिल चुकी है बजट अनाउंसमेंट के बाद में, लेकिन सर्टेन उसमें ऐसे पॉइंट्स रह गए हैं जिसपे जीजेपीसी ने इस बात को मिनिस्ट्री और अप्रोप्रिएट फोरम पे उसको एड्रेस करने के लिए हम प्रयासरत हैं और हमें संभावना है कि इसको हम एड्रेस कर पाएंगे निकट भविष्य में। और जो भी मेंबर्स को उसको नोटिस या इस तरह की चीजें इशू हुई हैं उसे हम एड्रेस कर सकेंगे प्रॉपर्ली। और मैं सुप्रीम जी से चाहूंगा कि क्योंकि ऑलरेडी हम समय की जो मर्यादा थी उसको क्रॉस हो चुके हैं और काफी समय हमारे पास में कम है, लेकिन एक जो मैं आपसे एक क्वेश्चंस हम आपसे पूछना चाहेंगे कि एक मेंबर ने इसके बारे में पूछा था कि एडिशनल रिस्ट्रिक्शंस प्रपोज्ड इन सेक्शन 38 seems harsh on part of the taxpayers. As experts, what would be you advise while dealing with filing of returns, compliance, etc. इसके ऊपर आपके ओपिनियंस को हम जानना चाहते हैं।
करेक्ट। सो जैसे कि मैंने उसके ऊपर टच अपन किया था कि अगर वी डोंट हैव एनी पावर्स टू कंट्रोल द सप्लायर और व्हाटएवर द अथॉरिटीज आर डूइंग इन टर्म्स ऑफ रिपोर्टिंग ऑफ द डेटा, they will prescribe their own norms in relation to where ITC shall not be admissible. तो उस सिचुएशन में हम क्या कर सकते हैं कि हम अपने वेंडर को मैनेज कर सकते हैं। हम अपने वेंडर, अगर हम किसी नए वेंडर को ऑनबोर्ड कर रहे हैं तो हमें उसकी स्क्रीनिंग करनी चाहिए कि वो कंप्लायंट है, उसकी हिस्ट्री क्या है, और अगर ऑलरेडी एग्जिस्टिंग वेंडर है तो उसका रूटीन कंप्लायंस हमें चेक करना चाहिए कि उन्होंने रिटर्न फाइल किया, और हमारी एक टीम होनी चाहिए जो हमेशा चेक करे कि उन्होंने रिटर्न फाइल किया नहीं किया, उनसे वो सब चेकलिस्ट हमें मंगवानी चाहिए। तीसरी बात ये है कि जो हमारा कॉन्ट्रैक्ट है उसके साथ एक सप्लाई अरेंजमेंट होगा, उसमें हमें एक इंडेमनिटी क्लॉज डालना बहुत जरूरी है कि कल को अगर हमारा इनपुट टैक्स क्रेडिट डिनाई होता है विद इंटरेस्ट तो वो आईटीसी विद इंटरेस्ट मैं आपसे रिकवर करूंगा। तो वो क्लॉज आई थिंक टू माय माइंड इज वेरी इंपॉर्टेंट। यू शुड रिविजिट ऑल योर कॉन्ट्रैक्चुअल अरेंजमेंट्स एंड इंसर्ट दोस क्लॉजेस इन द कॉन्ट्रैक्ट विद द सप्लायर। These are the few, I think, advice which can be given in relation to this.
थैंक यू सुप्रीम जी। हम इसी के साथ में अब इस आज के वेबिनार से आप सभी का आभार मानते हुए विदा लेते हैं। जो मेंबर्स ज्वाइन हुए हैं उनका भी हम आभार करते हुए कि हम आपसे अब IIJS में मिलेंगे। आने वाला शो हमारा भी नजदीक है, तो इस सेशन का MSME के बैनर्स के नीचे हम IIJS के पहले का लास्ट वेबिनार कर रहे हैं। अब IIJS में एक बार फिर आप सबसे मुलाकात होगी। सुप्रीम जी आपका बहुत बहुत धन्यवाद। जो मेंबर्स जुड़े हैं आप सबका बहुत आभार। और अगर आपको कोई प्रश्न होंगे और भी जो प्रश्न आपके यहाँ पे आ रहे हैं, मैं आपको बता दूं कि आप अपने प्रश्नों को हमारे पास भेज दें लिखित रूप से। हम सुप्रीम के भी कॉन्टेक्ट्स आपसे शेयर कर देंगे। आपकी कोई भी डाउट्स है तो आप उससे रूबरू हो सकते हैं। और भी क्वेश्चंस आए हुए सुप्रीम जी, मैं चाहूंगा कि आप खुद उसको नोट कर लें। मेंबर्स हैं तो आप उनको इंडिविजुअल लेवल पे हम उनको आंसर दे देंगे।
श्योर श्योर।
थैंक यू सो मच। समय की मर्यादा को ध्यान में रखते हुए हम आगे भी इसको आगे नहीं बढ़ा सकते हैं। तो मैं एक बार फिर से GGPC की तरफ से आप सबका जो है अभिनंदन करते हुए विदा लेता हूं। मैं हमारे एग्जीक्यूटिव डायरेक्टर सब्यासाची की तरफ से आप सबको बहुत बहुत धन्यवाद ज्ञापित करता हूं। थैंक यू सो मच।
थैंक यू मिथिलेश जी, थैंक यू GJPC।